This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights. This free service provided for everyone, just a snippet of some of the stuff we've discussed this week at TF Metals Report. Now's a great time to become a subscriber. It's going to be a fascinating end of the year. Of course, it's only $15 a month or about 50 cents a day. Great online community. I don't think there's a better value that you'll find anywhere on the internet if you want to learn more about the precious metals. As the week began back on September 27th, we were watching all sorts of stuff. Gold and silver prices were under pressure. But, we also keep track of the mining shares. Eric Sprott first turned us all on to Kirkland Lake back in 2017 at about $6 or $7 a share. It's done great in the years that have followed. Well, now all of a sudden on Monday there was talk that Kirkland Lake was getting ready to merge or acquire or be acquired with some other company. We didn't know at the time who it was going to be, but Kirkland Lake was certainly a topic of discussion on Monday, September 27th. So then finally with Kirkland Lake. Like I said, the stock has been perking up lately. On the daily chart that goes back a full year, last October was as high as 52. It was higher than that in August. Comes all the way down, and when gold double-bottomed at 1680 in March, Kirkland Lake double-bottomed at 32. And while gold's only back up to 1750, how about that? Kirkland Lake instead 44. But look at that candle today, and then look at your final chart. This massive pop right at the open for Kirkland Lake, going from 43.65 to a high of above 46 in the first half hour of trading. And then, nobody believes it. Down, 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 down. Now, I haven't looked to see if there's official denials, and even if there were official denials, would it mean anything? Like I said, that ICANN report seemed detailed, seemed like they had their ducks in a row. But man, no belief at all. It's like, oh, look at this, Kirkland Lake 46, get me out. I got a chance to sell at 45, get me out. Oh, it's still near 45, get me out. I'm not waiting around. Maybe it'll be a take under. Given the way things have gone for us lately, would that surprise anybody? Anyway, we'll see. But that was at least one little bit of interesting excitement action today. If you're going to follow the precious metals, you got to follow all markets, bond market, Forex, the stock market too. And we've been paying close attention to the S&P 500 and the New York Stock Exchange action as of late, as it begins to look like it's starting to break down. As you know, the Fed is getting close to turning down the surge of QE that they put in every single month. And that might start to roll the stock market over. There are some hints of a top breaking down through the 50-day moving average and starting to move on that 100-day moving average as well. And that was a topic of discussion on Tuesday, September 28th. Okay, here's your chart of the S&P 500. I thought I would give you all of the three key moving averages for a couple of reasons. One, we're below the 50-day, the red line again, right? Almost looks like a failure to get back above it with this action today. And we start making new lows below 4,300, which were the intraday lows last Monday on all the Evergrande concern. Well, then we're going to be talking 42.50 and 42. But anyway, but more importantly, we're making a lower low down from that peak back earlier this month. So we're going to have to watch real closely. Now, the other line on here is the green line. That's the 100-day moving average. And notice that's almost exactly where the S&P bounced today. So we'll be curious to see what happens now tomorrow. And the rest of this week. The other thing I want to show you, here we mention this all the time, that we wait for that moment again when the 50-day moving average in gold moves up through the 100-day, and it's above the 200-day, and all three of them are sloping upward because that is the most positive configuration you can have signifying a bull market. Well, what do you have here? This is a bull market. This is what it looks like. 50 days moving up, the 100 days moving up, the 200 days moving up. They're bullishly stacked. This is exactly the type of thing I'm talking about. Now, it doesn't mean it goes on forever, as you know, right? However, sure looks good as of this moment, but we're going to have to watch the stonk market to see if it makes lower lows versus last Monday. As you know, Wednesday the 29th brought a major smash not only in COMEX gold, but in COMEX silver as well, driving it down below $22 an ounce. That's a big technical level, and we hope that price gets back above there by Friday, because you don't want to close below 22 on a weekly basis. On Wednesday, though, a lot of this selling was due to computers dumping COMEX digital silver because of the rise in the U.S. dollar. So we looked very closely at the dollar, and we found that, you know what, it's pretty heavily overbought with an RSI up at 72, and it's about to run into pretty significant resistance. So there was hope. There was hope maybe that the dollar would begin to pull back and that might lead to some bids in COMEX silver. So here's a really up-close look at the chart of the U.S. dollar index. All right, here's your chart of the dollar that I told you this is going to be the most important chart I have for you all day, maybe even all week. All right? Now this goes back 1st of June last year. I don't want to put too many daily candles on here because they just get too small. Hard on my eyes, so I can only imagine how hard it is on yours. Anyway, it still gives you the point. Let's point out a couple of things here. Crashing down in July of last year, right? This is all part of when silver just soared finally. So I mean, it works both ways, obviously. And gold was soaring as well. You'll notice over here in August, dollar index was 93. When silver was 30 and gold was 2,100. We're now 94. Okay, so these people that say gold or silver is just simply the inverse of moves in the dollar, I mean, this just shows you that's not true. There are a lot of other factors going in, not the least of which is bank manipulation and control of trend and sentiment and everything else. I digress. If you recall back here, if you remember back at this time, we were watching... Maybe I'll put a box on this chart so everybody can see it. Basically 94 as resistance and 92 as support from the 1st of August all the way until almost the 1st of December. Okay? And then it finally broke down, went all the way down to 89.5. There were a couple of false breakouts. The first one there in late September, about this time last year. And we went intraday all the way up to 94.75. Right? Okay, that now is the highest. Okay, we're just past that date. I think it was September 24th or something like that last year. Anyway, we're just past that date, so we can't say that. So this really is the highest in a year. But that would be your next level. You know, we're going to want to watch 94.75. So you draw a line across there. Now look what that's running into. There's a channel here. These are two perfectly parallel lines. Okay? The June FOMC, June 16th, is when things really started going south for us, when we're at 90.50. But a few days before that, the low is down here at 90. See that? Okay. Extends to that first peak, I don't know, 2 weeks later. Up there at 92 is actually 92.50. All right. So if we draw this red line, collecting all together all of those peaks that came in July, okay, that gives us a line that almost perfectly intersects 94.75 now. Tomorrow, the next day. But you could also draw this perfectly parallel blue line, and it's perfectly parallel. Start it back there when we were at 90, a few days before that June FOMC, and notice it perfectly catches that most recent low earlier this month at 92. So I'd say this is a pretty good channel. But notice the intersection of this resistance at 94.75 over the next couple of days. That's why I said we might be getting close to a kind of short to intermediate term top in the dollar. Thursday, September 30th brought the end of the month and the end of the quarter, and it also brought another Thursday Conversation, our weekly free podcast that you can always access through the TF Metals Report site. And again, it's always free. You don't need to be a member or a subscriber to be able to listen. This week's guest was Joe Mazumdar of the fantastic newsletter Exploration Insights. Talked to Joe about the mining sector, and one of the key points he made was the margin pressure that the producing companies are beginning to feel from rising input costs of energy and labor. So be sure to catch that podcast again. It's free for all on the TF Metals Report homepage. Then on Friday, October the 1st, we got a new month and a new quarter, and the metals continue to rally from their earlier losses. In fact, COMEX Silver and COMEX Gold are now actually up on the week and ready to paint a green candle. Those big tails hanging down make you feel like maybe we've got a chance to stabilize here at a minimum. Again, for COMEX Silver, $22, a very important level. That level was violated back on Wednesday, and the stops were run. That wasn't necessarily surprising. We've been worried about that for weeks. But also, as we've been pointing out for weeks, it would be a weekly close below 22 that would be most concerning, and we're going to avoid that fate. We may even close back above 22.50 or higher by the time things wrap up on Friday. So all is not lost. Again, remember from last week, the swap dealing banks are now net long COMEX Silver. That provides a floor too. So there's some hope going forward that maybe we've seen the worst of it finally. We'll know more by next week, and hopefully it'll check back to whatever platform you listen to these podcasts on, whether it's Buzzsprout or Spotify or Apple or YouTube. Just check back next week. Give us a like, a subscribe.